Good morning, ladies and gentlemen. How are you? Slightly under the weather, it would seem. What a great session we're about to have here in the hot seat of InsurTech CEOs, and we have a great set of InsurTech CEOs right here. So we're going to kick off with the first question. Ian, what's your value proposition? How do you stay ahead of the competition?
Good hard one. ZA Tech, we came out into, we left China and we came out into the international markets thinking we need to bring the innovation that we've seen in China out into everywhere else, but from a very tech-centric software perspective. And so we set off to kind of establish the basics in terms of deploying solutions such that insurers can go digital and do embedded. But then found that on the other side, the platform side, they also needed a little help. So we also enable the grabs, the clooks, and so on, and provide software to them. But at the end of the day, we see the market evolves and the need for different technologies involved. So we continue to differentiate and dig deep and do R&D. And so we hear our clients, we hear the need for things like AI, and we build towards the needs of the future of the industry.
So investing in the future.
Yes, investing in the infrastructure and what is necessary to get the tech foundations right to build the new business models.
Fantastic. Mark, what's your value proposition and how do you stay ahead of the competition?
So our value proposition is, first of all, focusing on partnerships. So we work generally with B2B rather than direct to consumer. So we work with large partners that have access to large bases of customers, everything from phone companies, mobile companies, to banks, retailers that have large reach. Our value proposition as a partner is we're across 35 markets as well. So we've got exceptional reach, which makes it easy for large partnerships to use us in multiple markets, from the US to Asia to Europe as well. We're digitally native, so everything we do is digital. And we spend a lot of time on our innovating of products and the technology for the customer, being the end user and also the business partner. How do we differentiate against the traditional insurers? So I think we focus there on trying to make the products that we offer accessible. So traditionally, in the more traditional insurance distribution model, the customer comes to the company doesn't go to the customer. And generally, you have one salesperson for one product. It's quite difficult to access. So by working with these large partners, we create accessibility for the customers. So if you look at a bank or a phone company or a retailer, they'll touch everybody in the country, which means accessibility is then, can be almost 100%. We then want to offer choice. So if I go to an agent, generally, I'll get the agency's products for the carrier that they represent. We're able to provide choice of products from multiple carriers. So accessibility and then range of product makes it very easy for the customer to make a decision. And then try and remove the friction. So for anybody who's bought insurance before, there's a lot of paperwork. Traditionally, it's not an easy process. So by being completely digital and working with large partners that already have billing platforms, we're able to remove that friction. So when they see a product that they want and decide, they can make that decision very quickly, and within minutes they can get protection. So those are the areas that we focus on.
Interesting, thank you. Tommy.
Yes, John. Yeah, so at Qoala we operate across 4 countries: Indonesia, Thailand, Vietnam, and Malaysia. And our business model, we focus on digitizing, like the end-to-end process, right, from the underwriting to the claim experience, in order to drive efficiency and customer experience as well. And in terms of our value proposition, I would say compared to the others, we are omni-channel. So we doing offline, online, and also the embedded business model. We also believe in, in insurance, we should focus on the end-to-end solution. So not just on the distribution side, but how technology can also empower the underwriting and the claim experience is a package together rather than just one part of the distribution. And I think finally, as a regional company, we also have a good understanding as well, in terms of the needs of this market. And I think one of our key goal is to be able to build a robust platform, right, that we can actually replicate across countries as well. Hence, we can actually go to the market fast, and we can also reduce, the development cost as well.
How important have partnerships been for Qoala?
Yeah, I think partnership has been extremely important, I would say, and it's a combination of like working together with the distribution side. For example, Indonesia are blessed with many digital platforms today. The adoption has been very, very fast in the past years and so on, right? So now partnering with them to create this new kind of like insurance product that can complement the experience will speed up the education and also create awareness to the market, right? But I think at the same time as well, having a close integration, working together with the insurance partner is even more important, right? Because in the end of the day, the value proposition is packaged together with the insurance product, right? We basically just providing a complementary kind of solution. So it's also important for us to be able to integrate the solution together and to create a better experience for the customer.
Interesting. Partnerships for bolttech has been particularly important, Mark?
It's been a big part of our growth. So we're a B2B company, so partnerships have helped drive our expansion. It's helped us obviously get very quick reach, so reach lots of customers. We have regional partnerships with, or global partnerships with device manufacturers, for example, and that gives us the reach. So that's really helped a lot and helped us get into the new markets. Those partners are also spending a lot of time understanding their customers as well and understanding what they want, what the gaps are, and the needs. So by talking to those partners, we can understand the customer faster as well. We obviously spend a lot of our time talking to the customers, but these big distribution partners invest a lot of money in understanding what the customer needs today and what their future needs may be. So by talking to them a lot more and discussing and workshopping, it's helped us understand where we need to be in the future, and then we can build the technology and the product range in order to meet that future need.
Have you sort of created a moat because of your partnership? When you talk about Buffett, we'll talk about a moat about the business. So you've locked in these partnerships, so no one else can get in there at the moment. Is that the source of your secret of your success?
Yeah, Ian's looking at me out of the corner of his eye there going, has he locked them in? Yeah, we try to, obviously. But if you're locking in a partner, there's more than the contract that you're signing. And obviously we all want to sign contracts that are good for us and beneficial for both parties. But I think it's about how you work with the partners that really locks that relationship in. So if they see you as their partner to innovate, their partner to drive the customer proposition, to help drive their commercials, the retention of their customers, and more than anything, the Net Promoter Score. So we focus a lot of our time on the Net Promoter Score. When we first started, we looked at Amazon's Net Promoter Score, and our target was to beat that globally. And in many cases, we're way beyond that. Then we looked at Apple's, which is obviously top-notch, and then we shoot for those levels of Net Promoter Score. And we believe that if we keep talking to our partners and we innovate and we understand the future need, we develop products and technology to meet that future need, and then the Net Promoter Score is up in the 80s, then we think that that's really how you retain those partners and create a moat, more than the contract that you sign between the two parties.
You've got a KPI on your NPS?
Of course, yeah.
Perfect. Ian, you've locked in your partners, right?
Yeah, surely. There are a couple of partners that we explicitly formed JVs with, but these were kind of just born out of a bit of necessity and kind of conviction in how we believe the future business models need to be. So early days, as I'm sure most of the crowd knows, we had a JV with Grab, for example, and that was a culmination of several visions, right? Because we all came from the Vision Fund, ironically, or not ironically. But there were key beliefs when we were coming out and expanding globally that the future of insurance, especially a space that was quite unaddressed, is these kind of like small, micro, what we called scenario-based, today they call embedded. A lot of these type of insurances just were largely unaddressed. And at the same time, when we were convincing insurers that sure, you need to have the right infrastructure, the right technology to get all these interesting spaces of new insurance done, we found that on the other side of the fence, the platforms that owned all the users, they were not quite sure what they were doing or even how insurance is affiliated with them. And then so along the journey, we spent a lot of energy approaching all the major platforms that own major user flow, just to tell them and explain to them, like, look, this is what we've seen. This is what we've done in actual business in China. And these are viable business models that we've proven over and over again year on year profitably in China, that there's a big space here that can be monetized with your user base. But you just got to bring the right insurance into your space. And so that then, in that level of conviction of this business model, in many ways we had to do JVs just because of that skepticism, I would say, at the beginning. Ironically, I would say 3 or 4 years ago, embedded digital in Asia, quite hot, quite easy to buy into. But then I think these days, the term unit economics have kind of surfaced, right? And so there's a lot of practicality and a lot of circling back on foundational understanding of insurance, right? And so kind of a bit of back to basics, but using technology to drive more efficiency to make those unit economics make sense. And so we have to continue to innovate and build more and drive that cost down in terms of the unit economics. But yeah, the partnerships and the platforms, they also need to understand they need to invest in certain level of infrastructure, which cause the JVs. But today, we see platforms also just subscribing to our SaaS solutions. And so that is perfectly fine. We share some revenue in some cases or pay per transaction. And those models now make sense because they've seen Grab, they've seen Shopee, they've seen a lot of success stories out there. But we also have our lessons learned. So yeah, I think we're all kind of taking a more intelligent step and we're seeing the industry mature in this space.
Beautiful. AI, Mark, transforming the industry, potentially going to disrupt bolttech. How do you think about this? How you stay ahead with AI emerging?
Yeah, it's a good question, John. It's a big part of what we talk about on a daily basis at the company, and we already use AI as part of our enablement as a business, and we're more of an enabler of people to sell insurance than we are a disruptor. So as we develop it, we're enabling our partners to use it better as well. We use it in multiple areas. So we use AI in our distribution on an agency and a Salesforce level, helping the end salesperson work with the customer better, how to make faster, better decisions based on their needs and their profile, which comes back to what we talked about before about that accessibility and ease of choice. Obviously, profit comes up a lot, and I've seen some questions from the crowd about profit already. And claims management and risk management, fraud management are all parts of managing that profitability. So we're using AI to look at trends, to look at where fraud exists within the ecosystem. How do we optimize that claims management side of the business, which is the biggest cost. So the cost of the claim is the largest cost, then followed by people. So how do we manage that side of the business so we can give a very efficient underwriting performance, which means that the right customers get a fantastic experience, but we try and keep the wrong customers at bay that are trying to maybe do something that's disingenuous. We use it for automation. So, when I first started in the industry, the claims process for a customer was not exciting. We use AI now for straight-through processing, so all our claims that come in go through. If they're a claim that doesn't need a review, they won't touch a human being, and we use AI to be able to process those claims as well. We're using AI for product optimization, so we've got internally produced AI that can automatically A/B test products through the ecosystem and offer different segments of customers different products, so we can really quickly understand which is the right product set for the right product segment. And we've developed internal AI to be able to remotely diagnose technology. So we can look at a phone anywhere on the planet and decide whether or not it's insurable. So is it in good working order today? That's a phone, a tablet, and then be able to say, yes, we'll take that risk because we know there's integrity of the screen, of the components, and we're happy with that risk. So it's a big part of our world, and that's obviously on the business side. Then there's the productivity side for the employees with everything from Copilot to ChatGPT. So it's very much part of our day-to-day life.
So fully integrating into your business model.
Yeah.
Tommy, for Qoala AI, where are you on that?
Yeah, I would say in general, technology evolves very fast, right? I mean, a very innovative technology will become more common technology as well, right, in the next few years and so. And hence, you know, like it's very important for a company to be able to embrace this kind of technology and how to actually integrate this kind of technology into the platform and into the solution as well, right? So we must be always ready on like the new set kind of technology, right? And I think for AI specifically, I think I see a very great use cases in driving customer engagement, driving efficiency from the operational perspective, I think for all of the industry. But for insurance specifically, I'm actually quite excited in terms of how AI can improve the underwriting and the claim experience as well, right? So this can actually reduce the cost to serve for the insurance company. This can actually help them to manage the fraud and the risk better as well. But on the other side, customer will also enjoy a greater experience. And I think as an insurtech company as well, scalability is always the key. And I think this AI would be a very key enabler to that, right? How we can actually create technology to actually empower, you know, like things that can be done by the technology. Yeah.
Is that AI?
Yeah. So one of the most amazing things about the heritage or the DNA of our company is we have a grounded listed insurance company in China as the parent company. And then over there, you know, Zhong'an, they built everything on modern technologies, right? On microservices, cloud native technology. And so they have the vast benefit of having 400 million customers and having all that data well managed and well groomed. And so they have already started employing Gen AI in their production in their own operations and at scale. So you have to imagine when you're handling 400 million customers and all the various customer service transactions and claims that flow through, we used, I would call now, old school AI, right? Just basic AI chat, right? Those old school chatbots that sit on your screen or in the app. And we were probably the best in class in that space in operation and production. And 97 of those transactions through that were settled automatically on that interface already. But then we couldn't even imagine ourselves that with the handling 400 million customers, we still had a substantial customer service operation and handling a lot of the manual flow in that sense, in that remaining 3%. And then with Gen AI, we were already last year able to cut 15% of costs employing the solutions. 15, 1-5. Wow. And that's only in production in the last quarter probably of last year. And so, and this year we expect 50%. And so for us at ZA Tech Global, what we have seen and we have learned as they actually bring the generation of Gen AI agents as a factory, and then there's a paper out there that we published and we worked through yesterday, early thoughts, but they've employed it and operationalized it in China, how to actually build on an ever-evolving landscape of Gen AI solutions, right? I mean, we saw OpenAI just upgrade to, you know, ChatGPT 4.0 or 4.0. And then, you know, Gemini had gone through their own upgrades, and these are obviously going through very fast cycles. So how do you source multiple sources of Gen AI solutions? We built a middle layer, or they use a middle layer concept to basically build those agents on top of agnostically any type of LLM solutions, whether private domain or corporate or whatnot. And so with that type of architecture and having the scale of R&D that we have, we are basically trying to extract that model and deploy that into the international space. And of course, though, the premise of that all depends on whether or not, you know, our clients in the international markets are sitting on that, you know, groomed database at the end of the day, and how are you going to do that? And of course, if everything is sitting on our SaaS solution, of course, it's easy to access that data and leverage those transactions and action on those transactions. But then outside of that, you know, it's a big unknown, right? And I think everyone, as they're trying to build their use cases and POCs, they're starting to see, yes, Gen AI can give you access to a lot of things, but then, and open a big door on possibilities. But then you still have to solve for being able to access your own infrastructure, whether it is to take action on the insights you get from Gen AI, or to actually use the database that you have on the Gen AI use case. So yeah, I mean, there's a lot of real problems in the world outside of China, right? Because they've built a lot of new technologies and in their own infrastructures. But we are quite focused, I mean, for our own tech stack and the solution that we give, we did very basic things like talk to your data. So literally just query and do some basic BI stuff. That was kind of the easiest use case because you're just looking up the data that's in our database. But then we definitely are trying to extract the real use cases that we've seen prove value in our own businesses in China and bring them out to the international market.
Fantastic, very interesting. Tommy, you've just, excuse me, you just had a very successful funding round.
Yeah.
47 million, if I understand correctly. Tell us about the congratulations. Tell us about the challenges. You're not a profitable business. You're not likely to be profitable for some years in the future, I think. Tell us about the challenges of raising capital.
Yeah, I think capital raising is always challenging, right? I would say in the past 5 years or so during COVID time, and even more difficult, I would say, in the past 2 years and so. And I think especially many of the tech companies are still trying to change the metrics, right, from the top line kind of metrics to be more bottom line focus and so on as well. And obviously to do that, you need time and you also need the investment and so on as well. Yeah, so it's not easy, but I think for us, over the past few years, when we are building the business, we always focus on building the key foundation. I would say we emphasize service and technology as our key value proposition. And I think this is what we feel, differentiate us compared to some of the players. And I think with that also, enable us to raise the round, right? But I would also say, at the capital is always there, but the deployment has been very selective, right, by the investor, by the venture capital, and so on. But the good news is, for company that keep looking to build a good business, I think will have a greater reward as well, right? Because I think the investment will be more focused to select a few players rather than a broader group of companies.
Talk to us about this trade-off between growing fast and getting to a loss or even a profit situation in the near future. How do you think about that trade-off?
Yeah, I would say it's a very tricky question, right? Because growing fast normally will be always in the expense of the bottom line. Because, for example, when you expand to a new business line, you expand to a new country, there will be always an upfront investment. And it will necessarily look good from the group perspective, right? But this kind of growth is extremely important, right? And hence we need to be able to balance between what are the key initiatives, what are the key expansion that we want to do. So the prioritization and the focus is the key, I would say, for us to maintain a good road to the profitability. I think another area that we see will be extremely important is the service creation as well. So how can we also go deeper into providing more value proposition, let's say, across a certain product line, whether it's motor, travel, some other retail products as well, right? How we can create more and more value so that we can also, generate more revenue as well.
Right. Now, bolttech's have done a fantastic set of capital raises and wonderful valuations. Wonderful. What's the challenges there? I mean, you've got the benefit of having some important keystone investors. That's, I think, assumed has helped the process, but what are the challenges for bolttech in raising money?
Yeah, thanks, John. In fact, I've got my Series B.
Thank you. Thank you for
today,
showing. Please, a round of applause for the sand shoes.
We did those for our Series B. Yeah, so we've been really fortunate. The challenges, I think it's what you raised and what Tommy raised there is 3-4 years ago, it was all about the top line number and the growth. And now it's about the balance. We talk internally a little bit about the rule of 40. which is your EBITDA percentage plus your growth percentage, and if the two of those are above 40, then that's a good metric, and that resonates with investors. One of the challenges is that balance.
There's a secret there, folks. If you need to take a note, that's a note to be taken, I think. There's a little secret there.
So it's getting that balance that's key. Obviously, it's being able to show the road to profitability, and we've been quite fortunate that we got our monthly run rate to a profitable point last year, and we'll be profitable this year, which is exciting. But it is difficult to keep the balance between innovating, keeping your margin, and the right customer price. Because obviously, if you have high level of innovation and high margin, but your customer price is high, that doesn't work. If your customer price is too low, then margins are not sustainable and profitability is difficult to achieve. So spending a lot of time on working on those things, and what are the things that you can do within your business to improve margins, like vertical integration in some cases, which we look at. Yeah, it's tricky. It's tricky, but we think we manage it well. As both of the guys do as well. And then, what's your vision for the future? Where are you going to go? What difference are you going to make? So we're trying to enable people within the marketplace that want to provide protection to be able to do it, like a mobile carrier or a manufacturer. We're not necessarily trying to disrupt, and we believe there's a high demand for that. And we've got a vision to build the world's leading ecosystem to allow a third party, a business partner who wants to provide insurance to be able to plug and play without building the technology, requiring the capital to do it, creating the distribution network. And I feel that if you're able to sell your vision and show your logical path to profitability, then that can really help with the challenges of raising the capital.
Thank you for that. Ian, your sand shoes are very nice, but not quite as nice as...
Yeah. I don't get to do cool things. We're quite lean. We're quite lean. So we actually just completed a fundraising round, but we haven't pushed the PR out yet. So you'll see that coming in a couple of weeks. And so the proper details will be there. So anticipate that. But yeah, we had to go through quite a bit. For us as a philosophy, of course, like in the early years, like 2-3 years ago, 3-4 years ago, we were quite anchored on growing the market, right? Because we had to do quite a bit to inspire and reinforce the visions and build them into strategies and help our clients go to market in this new digital space, and that was the hot topic. But then all our commercial deals, we have always been very strict in making sure they were quite profitable, or we had some amount of margin in all those contracts. And so really, at the end of the day, our cost basis comes from our R&D. And then I would say early years quite straightforward because embedded in digital, that's our sweet spot. But then as we got deeper into our clients, we kept hearing stronger and stronger demand that, hey, can't you just take that technology and then take over my traditional business, or at least components of that architecture? And then so we had to dig deeper in filling those demands in terms of doing that R&D into those traditional core provisions, so all those core system needs. So whether it's core or claims or underwriting and so on and so forth, and really building that out so that it could support traditional business, whether P&C or life. And so along that journey, we grew, let's say, in tandem to our revenues, so it didn't look so bad, and we had our moment of profitability 1 year. But last year, as we entered into last year, we dug super deep into this core space, and then we built those core systems, and then that led to some, let's say, not negative cash flows in that time. And then in order to tie things up and then do a next round of fundraising for this round that we had just closed, of course we had to clean the book in the bear market, right? So in the bear market, especially for SaaS companies, I've been quite harsh. So and then and especially during a bear market is when the capital markets will start asking questions like, oh, is this SaaS thing a real thing? Is it actually a profitable business long term? Looking at all the ones that have IPO'd. And so yeah, we were definitely facing a ton of challenges on whether our book was clean. Right. And so we had to rationalize our R&D. Luckily, we had built a lot of the most important things that we needed. And we do continue to do R&D, like in AI. So there's also a pivot through the AI R&D. But yeah, we managed to clean up our things, and then we closed this round. And so we're facing the rest of the year quite positively. But yeah, I would say there's a lot in this tougher market these days, and then the insurance industry as a whole. We all have to take up more practical steps. So I think it's a holistic theme, right? Whether it's the embedded space and digital, and then wrapping it back up to core insurance, right?
Well, ladies and gentlemen, that's the panel of InsurTech CEOs in the hot seat. Will you thank the panel?
Thank you so much.
Thank you.